taking a look at the market's picture, it seems to be supported for now by strong earnings reports that are being released. Your overall view on the earnings season that has just passed us by and what it says about the health of Ghana Incorporated?
Well, I think the earnings, based on the earnings results that have been released so far this year, it has given some hope that this year would be a much better year for us. On the background that in 2010, there was a lot of saving, cost cutting by government. We thought the economy was not going to do so well. Companies were complaining that they were suffering under huge credit cost and inflation. But based on the results that we have seen so far, I think the economy is heading in the right direction. If we can get a better performance on what happened in 2010, then 2011 will be a very good year for the Ghanaian economy and the businesses operating within our environment.
So that translating to what exactly when it comes to your view on overall market valuation at this stage?
Well, I think in terms of market valuation, the results that are coming out are bringing, for most of the equities, the valuations are just about right. A few are undervalued, but most of them are just about right for investors to get into the stock, especially if they share the same forecast of economic growth that the World Bank and IMF and even the government of Ghana have put out around 12.3%.
Let's get stock specific here. Ghana Commercial Bank has been standing firmly in the spotlight on the back of its numbers. And the standout feature is that the bank has managed to grow its interest income quite nicely, more so than in the past. Is this as a result of higher charges or a matter of fact that they're growing their loan book?
Well, it cannot be in terms of just higher charges. You see that interest income went up by around 46%. Definitely, the loan book accounts for a huge part of this success. What is significant about the results GCB has released this year was that somewhere half year they made a credit impairment loss, a huge credit impairment loss into their P&L. However, by the end of the year, they showed profit after tax growing by close to 200%, which is quite significant and explains why investors were bullish on GCB the whole of last year. One single thing to understand is that the credit impairment charge that they pass through their P&L, that the absolute amount is bigger than the profit after tax that they recorded for the year. So that tells you that if they didn't have to make all those huge charges, it would have been a very impressive and fantastic year for GCB.
To what extent then is that a concern for you? Because, in the spotlight would have to be the bank's risk mitigating strategies, because when it comes to the bank's balance sheet, investors always watching that NPL line.
Well, in terms of the NPLs, we think it's just about time that they dealt with the issue. This issue has been plaguing the bank for a very long time. It has to do, not totally. The credit charges were not totally did not have to do with their financing of oil imports for the Ghanaian economy. Majority of it was due to that, but there were other sectors that they had to make charges for. However, somewhere early in the year last year, GCB got a new MD, and we know there's a new team there. They got a new board the previous year. So we are just reading it as, these guys have taken a good look at the books. They decided that let's just put all these things behind us this year and then let's move on. And in the year they put that behind them, they recorded fantastic results. So based on this, we are watching carefully what will happen in the first quarter this year in terms of NPL for GCB and the half year.
Certainly, the outlook, Winston, looks to be promising. We know that the banks are in a bit of a sweet spot at the moment with that oil stream coming online, and that's spelling better GDP prospects, and banks' earnings highly correlated with GDP growth as well.
Yes, absolutely. Once the GDP is growing and government is putting the forecast around 12.3, we have Ghana as a country since independence has not recorded a 12.3 growth in GDP. Last year's GDP is estimated around 5.9. So that should give you the significant growth we are expecting this year. Definitely, We're watching the financial stocks carefully because new business are coming into Ghana, new projects are coming, they all require financing, and therefore it should be a very good year for the financial sector in Ghana.
Making your watch a little bit easier is some news, positive news out of the Statistical Office in Ghana, saying that they're going to be releasing those GDP reports on a quarterly basis as opposed to the yearly GDP reports that the market's gotten accustomed to.
Well, absolutely. That was just fantastic news that came through this week. We've all just been clamoring for us having GDP estimates as we go along, like it's done elsewhere in the world. We are happy that the Statistical Service is going to do this. They have brought in consultants to just review the process, and we're expecting to see the first quarterly reports of GDP maybe in the next 2 months. That would make the work of analysts, investors, everybody easier to see what is happening in the Ghanaian economy.
In that context, quick look at a couple of the other banks. UT Bank releasing a first set of numbers since its merger with UT Financial Services last year. Have we started to see the benefits of that consolidation filter through?
I think in my view, yes. The merger was done somewhere half year on 16 June. UT Bank, after being acquired by UT Financial Services, listed on the Ghana Stock Exchange. By year end, the results they have given to us, which is the post-merger results of the combined entity, you see earnings going up earnings going up by 32%, which is quite significant from the bank's perspective. I think from financial services, when they were financial services, UT Bank has proven to be a good manager of finances within Ghana. So I think they will do well. We're all looking forward to what results they come out with in the first quarter of this year.